can, you know, share our trade ideas, ask some questions that y'all might have for Kim that you cannot ask her because it might be too busy. And then, you know, maybe I can get y'all answers. But first thing, shout out to Kim. I appreciate you. I love you, sis. Thank you for getting everybody in here together. Let me turn this off. Thank Kim, of course, as usual, all the time, every day. So before we go into the charts, I just wanted to show y'all a couple things that I think that you guys should probably use to add to your trading system. So like, quick question. Let me get my notes right quick. Let me get my notes. How many people know what their daily goal for trading is? Like how many pips you try to get every day? Drop it in the chat real quick. If you already know, like every day, how many pips you're gonna try to get? $45. Somebody named iPhone says 45. Hannon says 20 to 25. Okay, that's good. That's good. So Hannon and iPhone says 45. Myron says 25 to 50. No goal, just going. That's Jason. Jason, well, I'm gonna pick on you, Jason. 50 for Christina. I would really like to make 40 a day. Okay, good stuff, good stuff. All right, so y'all know why it's important to know why you need a daily pip goal, right? You know why, right? And if you don't, you need to figure out what your daily pip goal is because or 500, right? Right. So you need to figure out your daily pip goal because you got to know what you're shooting for, right? You got to know why and what cutoff. You want overtrade, so you want to take dumb trades. And you want for no reason, right? Yeah. Okay. So you got to know your daily goal, right? Once you know your daily goal, you can determine your weekly goal. Once you know your weekly goal, you can determine your monthly goal. Then once you know your monthly goal, you know your yearly goal, and you know what you're shooting for, right? So it's this tool that's free, right? It's free. Everybody can get this. If you trade in with a MetaTrader 4 account, we'll go to let me see. This is called FX Blue, right? FX Blue is free, like everything. You can sync this with your account and you can get data on your account so that way you guys can know, how you doing, like what am I trading? Like what's my percentage? Like, am I trading at 50% accuracy? Do I win more on sales? Do I win more on buys? Do I what's my weekly percentage of how much money I make? This website is absolutely free. It's called fxblue.com. I'm gonna drop the link right quick. fxblue.com, and I preach this to everybody I know because for me, when I I was trading without doing this and without seeing this kind of stuff, and then when I started using it, I noticed that I was able to say, all right, I did 5% today, or I lost 10% today, right? So in order for me to make up this 10% today, I'll need to get 11% to make up for those 2 days. So I'll know the next day, all right, I lost 10%, so I need to try to make up 11% to cover that 10% loss, right? So let me see. Can I mute everybody?
1, 2, 3. Period close. Let's go here.
Okay. All right, cool. So, um, so this site gives me an idea of what I need to look for, how I can. Yep, FX Blue is that the calculator. It's right here. Yep. So here is an example of this person, right? Here's an example. This is an example chart, right? So this guy, by looking at this chart, right, we can see, let me see, some brokers show a gap, show GBP pair. We'll go over that, Henry. So this just like some tips before we go into the charts. Like, I'm gonna get to the charts, but I just wanted to go over a couple things before we go into the chart, just to kind of give you some help too. So this is an example of like some of the information you can find out. So like, I know, all right, these are the pairs that I trade, right? I trade 32% or 37% Euro CHF. Euro GBP is, I traded 30%, right? I know that I'm trading at a win rate of 79%, but this dude is not profitable, right? This dude's not profitable, but he's trading 79%. What can we get from this? Like, what kind of information can we get from this? We can tell that this person probably over leverages, or he doesn't let his winners run because of this, because of this 79%. We can dig further into this trading. We can see his profit right now. He's down on his account, $474. His profit factor is 0.81, meaning every time he makes a trade, he doesn't make one. His risk reward is 0.81. So you're actually trading with a negative reward to risk ratio, right? And then we can see his average win is only $7, but his average loss is $38, right? So he's doing something wrong, right? And you can analyze this kind of data, and it automatically pulls this data in once you link your account to it, and you can see this kind of stuff. You can answer these kind of questions for yourself, right? So if we look at risk, this guy's at a 100% risk rate, right? This is not all accurate, but like this will tell you like where you are versus where your account could potentially be, right? So we can see that his worst day, he took a 5% loss, which ain't that bad, He averages 1% losses, right? So he got 23 1% losses, right? So he's got 3 weeks that he's lost 1%, 4 weeks that he lost 4%, 1 week where he lost 6%. So he's not doing bad because his accuracy rate is good, but he needs to, he just needs to kind of work through some things with his trading. And now, so we can look even further in detail on a monthly view. He does a negative 1%. On a weekly view, he does a negative 0.3%, right? So again, numbers telling the story. Like, numbers are telling the stories. He wins 94 days. He's won 94 days. He's lost on 36 days. He's won 24 weeks, lost 13 weeks. 4 months he's won. So this is where, he does good on a daily basis. But you can tell, like, at some point throughout the month that he does something freaking dumb, right? Like, he takes a trade where he over leverages, or he takes a trade where he probably didn't plan it out. He probably just jumped in something sporadically, and took an L on that. So we can see that because if we just looked at his days and his weeks, he should be winning his trades, right? But in a monthly view, it shows you where he's making his mistakes. You can go into the charts right here and see his drawdown. Like, you can see, like, he was doing good, then he took a huge loss or a huge losing streak. He was doing good, started leveling off a little bit, some consolidation right here. Then he broke out on the negative side, right? We can see all that stuff, right? Then we can look at his open and close. We can see the symbols that he did the best on. So by looking at this, we can see, all right, maybe he needs to leave Euro GBP alone a little bit, because his gross his gross loss is $1,225.15, and his net on profit is negative $600. So you might not want to trade Euro GBP for a little while, right? Because you're up on Euro USD, he's up on Euro USD $277, right? Maybe you need to stick to trading Euro USD for a little while and not touch Euro GBP for a minute. Euro GBP is kicking his ass, right? So he needs to kind of back off from Euro GBP for a little while and just go back into the charts a little bit and maybe figure out what he's doing wrong, right? You can see his average wins, average trade, average loss. His worst trade, look at this, $162, $179 on Euro GBP, right? And then finally, you can, there's a lot more you can get out of this, but I just want to kind of get this over to you quick. On the monthly view, this is how much profit he's gained in each month, right? You can see that. You can see where his winning percentage was. You can see what his average win, average trade, worst trade, longest trade, the total amount of pips. So for that month, he only netted, for this month, he only netted, whatever month this is, he only netted 24 pips in the whole month, right? So he was doing something horrible. He was taking a lot of crazy losses. Then he was down for the month here, down for the month there. So this is some stuff you can get, and it's for free. Like, you don't have to worry about paying for this. You link it to your account. I'll show you real quick. So I got this demo account right here. My username, my login, and the server. Look, if I was gonna set this up, right? And you go to this page. This is the setup page right here to sync the account. You look for the server, account number, username, password, drop the email address, and you just register that quick. Say the password. So, and I can automatically, not now. It takes about 15 minutes for everything to sync, right? But once you get it synced, right, you'll have your own page. This is a dummy account that I just set up. It's got my balance, nothing traded on there right now, but it is that quick, that you can have this information for your own personal account that you can use to understand what you trading and how you, and like some of the things you might be doing wrong or some of the things you might be doing right. And you can get this like that quick, Then the next thing I was going to show you, let me see. How many people struggling with setting up alerts? Drop a yes, no in the comment, in the chat. Okay. All right. So there are, okay, so okay. So those of you guys that are having trouble with setting up alerts, do you use any tools to set up your alerts, like Drake do, call levels, trading view? You have an indicator. No. I use one indicator on my chart. I use volume. That's the only indicator I use. So who has a laptop? Do you guys trade from a laptop or just from a cell phone or a desktop? A desktop or laptop? Just phone? Just phone? Laptop. Okay. So this will go for the people that trade for, okay, both. I use both too. So this will go for the people that trade from their desktop, right? So if you trade from your desktop, you have the ability to set up alerts on your mobile phone, for your mobile phone, that'll get push notifications to your mobile phone. So that way, if the alert go off, you can hear it on your computer, and you can get it pushed out to your phone. And you can do that without using an app at all. You know, you with your MT4 app, you can do that without having to worry about setting up any type of notifications or any type of external apps. Like, I only use my MT4 because my MT4 lets me set up notifications, push notifications, and I don't have to use another app. I just use my MT4, and I don't have to worry about it, right? I'm gonna show you really quick how to do it. And let me just log into this dummy account right quick, because I want to show you really quick. And then after that, we can just open up the charts. Okay. All right, let me drag this up on Mac. So, what, Athea, is that how I say it? Did I say it right? Athea. So, what version of Mac do you have? Because that will depend on what. Have you updated to the new Catalina? Yeah, let me know. Let me know what version you're on, and I'll tell you what to do. All right. So from here, right? Okay. So this is my demo account that I just set up, right? And the things I'm gonna need to do this, I'll need my MT4 on my phone. Let me see if I can connect my phone to the laptop so I can share that. I'll need my MT4 on my phone, right? I'll need oops. Once I have the MT4 on my phone, there's something I'll need to show you real quick. Let me disconnect you. Disconnect you right quick and just get it up. All right. All right. So 2 seconds. Where are you? Okay. I'm gonna do 15. Okay, so from your MT4, this is the first thing you need. I'll talk about this while I set this up. This is the first thing you need. You got to go to tools, right? You're going to go to options. Then you're going to look for your notifications, right? This needs to be enabled, push notification. And then now notify trade transactions. You don't have to put in notify trade transaction. It'll work if you don't do it, but you do it so that way you know when your stop loss hit, when you enter a new trade, or when your stop loss moves, if you have a trailing stop or something like that, right? It'll let you know every time that you go, every time something happens to that particular trade that you're in while you're trading, right? So you'll need to make sure that those two are checked, right? Then you need to make sure you have your meta quotes ID, right? So you get this from your mobile phone, right? This comes from your mobile phone. Your meta quotes ID will be available to you when you go into your app on your phone. And hold on, let me see if it's ready. The movie recording. iPhone. All right. So, can you see my phone right now? You guys can see it? You guys can see my phone on the screen, right? Okay, cool. So once you are inside of this window, the notification window in your Forex app, the next thing you got to do is you're going to go open up your hold on 1 second. Okay, connect them back. Okay, so once you come inside of your mobile phone, if you got an iPhone, this is the process. If you got an Android, it's the same. Yeah, it's being recorded. If it's an Android, you're gonna look for the same thing, but I can't tell you how to get there. But you still need the same number, right? So you're gonna go to here, go to chat and messages. Then at the bottom of the screen, right, there is your medical ID, right? So you take that medical ID, drop it in his this link, and then you're ready to test it out, right? So watch this. Here's my test. You see that? That's my account at 4:26 p.m. Hold on, let me do one more test, right? So let me take the mute off, right? All right, so that was without the audio, right? I get my tested again. Oh, come on. I got it again. I don't know why it didn't go off, but hold on. I think because I got the volume down. Okay. I think because I'm doing the screen recording, it's not going through. But here's another one. Even on my watch, you know, I get my on my Apple Watch, I get the notification right here too. So I can get the notification on my phone. I can get the notifications on my Apple Watch if I got that, and then I can even come over here. Watch, hold on, let me slide this to the side a little bit. Mojave. All right, so if you got Mojave, you can go to I'll show you I'll hit you up afterwards, right? So that way. So when you actually set up the alerts, right? Let me see. Let's try Bitcoin. Not do it. Huh. All right. So I can't even do it because I think it's a market close. When you actually go to set up the alerts, let me show you what you'll have to do. Why am I not able to do this? UTC. Okay. That sucks. New order. I cannot do it from here. All right. So because the market's not open, I can't do it. I'll finish showing this up afterwards because I can't do it until the market opens, which is in 30 minutes, which we'll probably still be on anyway. So I'll come back to this. Just remember, the most important thing is options, notifications, push notification, notify trade transaction, meta quotes ID. And you get there from your phone, you come here to chat and messages right here. And from chat and messages, you just go into it, grab this number at the bottom for meta quotes ID, and then add it here. And you can get the push notifications. And you can get the push notifications if you have an iPhone or Android. If you have an Apple Watch, you get the notifications on your Apple Watch. So when my notifications go off, the only thing about this is this laptop or this desktop, whichever one you use, will have to be logged in order for you to get your notifications. So like if you set the notification and then you close the laptop out, you won't be getting your notifications. All right, so keep that in mind. So it's got to be something stationary. So like look at this, like my place, like I got two laptops. I got this one that's always on at the house. Then this one I take with me everywhere, right? So I keep this one on me all the time. This one I just set up my alerts on, right? So that way I can get my alerts anytime. So like the day before or the night before I leave out, if I'm headed to work or something like that, I'll set all my alerts up on this computer and I'll just leave it open, right? Or leave it like this. Because as long as it's like this, standby, it's okay. I can get my alerts. But once I like leave out and I close my laptop, I won't be able to get the alert. So just make sure that when you have if you're going to use that, you go ahead and leave that open. Will you be able to, wow, the market is closed, show us how to look that setup. Yeah, I'm about to now. So, all right. So let's go to the charts. I'll come back to the alerts once the market open because this FX choice, I don't really trade crypto, so I don't know why. I thought that I could show y'all from a crypto chart, but anyway, I'll come back to that in a second. And so somebody mentioned UJ, right? Somebody mentioned UJ. So I'll go over UJ right quick first. And let me pull up UJ. UJ. And so the way I mark up, the way Kim mark up is top-down analysis, right? Start from the higher time frames, move down to the lower time frames that you're going to trade from, right? So if you're taking a trade from, if you're taking a day trade, right, you want to start from your monthly or weekly. No preference over the other. Sometimes I just go to monthly. I just go to weekly. I don't go all the way down to the monthly, all the way up to the monthly. I'm sorry. So UJ on the monthly, we won't go to, but we'll go to the weekly. So UJ weekly, right? What are we seeing, right? So first thing first, for our zones, our zones, and then you can spot the first zone kind of automatically just glancing at the screen. Like, where's your first zone, right? It's right here. Everything, you got something happen all the way over here to respond to this zone right here. 1 touch, 2 touch, 3, 4, 5, 6, 7, 8, 9. Broke out here, broke down here, broke out, failed, fail, 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 fail. First zone, zone number 1. The closest zone to where price is right now is right here on the weekly. Another time, broke, fell right here. It didn't come all the way up, but it fell because it was reacting to this zone. Fell right here, breakout, retest, breakthrough, false, break right here, fail, got a breakout right here, a retest right here, a retest right here of this zone, another retest right here. That was the zone from a weekly. If you want to add in this next one, hang on. You want to add in this next one if you want, because that's where it's going afterwards. Right about here. That one's. Then we got another one. You want to add this one. It's probably going to be on a weekly. Like this one probably will be more definite on the daily time frame. So Those are the major zones right there, right? Let me change the color. I just want to add this one just to be these last two. And like what I'm marking up now, it's on a weekly, but you'll see like it doesn't look like this is a zone on weekly. On a daily, you'll see, or the daily or the 4 hour, you'll see where these are zones right here. So we drop down to the daily. We already can see we got a downtrend market over here. On the weekly, we got a downtrend right here on the weekly. We got a trend line that's holding on the weekly, right? You got touch here, here. This count as a touch. This, you can count this as a touch too. This one, this one, this one is responding to this. Is it gonna break this on the weekly, or does it respond? Or on this, in this case, let me see, where am I? Phantom, my ghost feed, right? In this case, do we get a circumstance where it's reacting to this trend line like this and breaks through, or okay, do we have a situation like this where it just continues to follow this trend line like this, and your ghost feed shows you, you know, does it continue downward, right? Or do we get a break out here, retest here, and a move up like this, right? Break out here, retest right here. Do we get something more like along those lines, right? That's what the question for this particular pair would be. Do we hold this on a weekly standpoint, right? And I'm gonna delete that and move. All right, so now down to the daily, right? Daily, right? So where we have zones on the daily. Anybody can see it. Everybody can see the daily zone, right? Nope. Okay. All right. So on the daily, you got a rejection here, a break here, rejection, 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 break, rejection. You got you another zone right here. Prices, zones, where is price coming to and turning around or breaking out from, right? It's coming to this point, turning around. It fell, broke down here. It failed this zone here, broke down. Here's the next zone from the weekly, right? It broke back above. It tried to come back down to this zone and failed this zone right here and broke out again. It's still responding to that. And look at the long wick on the weekly. Like, why is this wick responding to this? Let me zoom in a little more. You can see this wick, right? On the weekly time frame, it's responding like the base, the close of this body is responding to this particular zone. The close of this body, like price was just going down, right? And then all of a sudden, it just hit the brakes. This is what, like, imagine a car going 100 miles an hour and tries to hit brakes right here, right? It's not going to stop automatically. It finally slowed down and then it stopped right here. But it's responding to this area because of this zone right here. And if you were trading this, you could have took the trade from off of this zone or this zone for a buy to go back up. And that would be if you were trading this for this particular move right here. But where we are now, right? So that was just a little quick example. Where we are now is we are here, right? I got another little area of support, resistance, you know, the key zone, right? You can add that one. We'll probably see that one more on the 4 hour. 4. Here's a zone right here, right? Zoom in. All right. So what price is now? Where is he reacting off to? How far do you mark the charts up? Mark my charts up every 50 pips? I mean, I don't know what you mean by every 50 pips, but like I just go from top down, from the weekly down to the hourly chart. And then I take my trades on the 15-minute and the 1 hour. Sometimes I take my trade, depending on what pair I'm trading, I'll go even lower than that because then I'm looking for something like a scalp or something like that, right? Um, Market move fast. Is there an alert you can set up if the market moves very fast or about to? Yep, I'll show you. Here's another little zone right here on the 4 hour. And sometimes I don't use lines. I'll just use a box because, zones these aren't perfect. It's not perfect. A zone can range over a couple of pips, right? So this would be a zone for me because so a zone area zones. So zones are areas where price is turned around or price is rejected or broke out from. It's it's a like you can consider support and resistance, but support and resistance is a lesser equivalent to a zone, right? Support and resistance happens all over the chart, right? You can break down, you can see the support and resistance all over the place, but where a key level is or a key zone is where price has come to and failed. Like so, you can see on a lower time frame, like, all right, this might be support and resistance right here. This little area right here might be support and resistance, right? That's support and resistance. Would you trade from there? Not necessarily, because this has the potential to go in several different directions, right? Depending on what kind of trader you are. If you're a scalper, maybe you want to trade right here. Let me zoom in a little bit. If you're a scalper, maybe you want to take a trade right there. But if I'm trading zone to zone, I don't want to take a trade from there because I'm not at the zone. Like maybe I'm taking a break or something like that, but I don't want to take a trade from that. That's support and resistance, right? This is showing resistance here. This is showing support here, but is it a zone? Because price over a larger time frame hasn't reacted to this price. So the reason why you want to stick to the higher time frame is because that's where there has been a pattern shown over a number of days or a number or a longer period of time that's shown that that particular price is somewhere that's a key level to consider. Like so in this case, 109, this area 109 area right here, we seen price kind of reject this area, right? Reject this area like from recent, right? Price came up near this area, it rejected. Price came up near this area, it rejected. It came up to this area, rejected here and here. Isn't it better to use a line chart as the candles fake out? You can use the line chart or candlesticks. That's just a preference up to the person because you're still going to get similar results. If I take this and put it on the line chart, watch my lines. They still line up, It still lines up to the same concept. It's this little area right here, you can consider it, but it's still within this main resistance area. It's still within this key support zone, resistance zone right here. Yes, it squeezed up above it. Yes, it's squeezed up above it here, but it's reacting to this little zone right here. So you can use the candlestick pattern or the line chart. It's just preference. You can use them both. You can come back. You can draw them up on your line chart and then come back and correct everything on the candlestick chart. That's just up to you, if however you prefer. But for me, I kind of already understand. Like, all right, long as I know that I'm within this little area, that I know that I could see rejection right here. I know I could see a sell from this area right here if I was going to take a sell, right? I know I can see a breakout from this area if it breaks above and holds above which show rejection, right? Which show rejection, right? Move on, more on top. Yeah. So again, I've got my zone to consider, right? If I want to add in, um, yeah, no, it's not bad. You know, you may be looking for two separate things. You and I may be trading two different ways. I trade breakout resets. Yep. I trade breakout retests. So you and I may be looking for two different things, but there's no right or wrong way to do it. This is just what I look for if I'm looking at a trade. So you may be counting this area, you know, of as a level or a zone, you know. I mean not, you know. So down to the 1 hour, right? I can refine this, right? I can add a couple of other levels, right? May want to consider this area. I may want to also consider this area right here. And those may be levels that I want to trade from. Sometimes I'll also consider a level like this, because this is a swing point, right? I could take an entry here if I wanted to consider this level. So, but my key zones are right here for this current price, right? So if I'm looking at J and UJ, I'm either looking at a break above this zone for a buy, of course, or a rejection of the zone. And we've seen it reject this area before, right? We've seen it reject in previous price action as recent as here, right? We've seen it come up, break out somewhat, and then fail off of this high right here. And this is our last high. This is our last area to break out from right here that it broke out. It broke out from here on December 12th. So either we get, and then we had a fail over here, a breakdown over here. It retested this area and looks like it's pushing up from here. So we could either have a rejection up here somewhere or break above here to go for a buy. When the market opens, there's a gap on some currency pairs. Does the market always fill in the gap? Not always. And not to say that it won't ever happen, because sometimes gaps happen and it may take months or weeks to close, you know. It's some gaps on some pairs that haven't filled yet, and it happened in 2018. You know, the gaps don't necessarily have to close. You know, it just depends on the price action. So it just depends on the pair. Like it may have been some type of news event that caused price to gap. It may have been some type of like there may be some G pairs right now because of the election results that gap and may not get filled, because if positive news continues towards Brexit deal, then you may not get that gap to fill because it might keep rising, you know. And if it does have some ebb and flows and highs and lows, it may never get back down to that previous price point, you know. So but in many cases, if a pair does gap and it does feel, that's usually a sign that that pair may reject that area that it gapped from. Like, let me pull him back up. I'll see, where is this? When US when US 30 gap, right? pull it back up. US 30 gap the other day. Let me see. Right here, the US 30 gap, right? I don't know what day this was. So this was back in August, right? So we can see US 30 gap right here, right? It filled the gap. It gapped up here, filled the gap. It gapped up from here, right? To here. It filled the gap. And then when it filled the gap, a lot of times the gap is implying the direction of the market, right? The gap is implying and saying that the market has the intention to push up. If it gaps up, if it gaps down, it may be implying that the market has the intention to go down. That's usually where a gap usually is a signal of the overall direction of where the market may go, right? So in this case, it gapped up. Though it pushed down, there was people that were like, it gapped up, it hit this zone, people sold off. These were likely people that enter trades here, enter trades here. They got in profit and they saw that it was in profit and they were like, all right, I'm good. I'm getting out of this trade. It gapped up on me. I know it's a potential that because it gapped up to this zone right here. So because it's at this resistance zone, I'm about to take profit. I'm getting out of my trade. So you got some people that got out of their trade, sold off on their trades. Then you have new traders that entered into the market over here that were like, all right, I'm taking this down for the sale. And they closed out once this gap filled, right? And it pushed the market up. In reverse, the gap that happened here, the gap that happened here, the price pushed down and then it gapped down to here. It gapped down to this zone all the way down here and then pushed up. We would expect it to push back down from there, but it didn't. So this is an example of when it filled and pushed back up. This is an example when it gapped, it filled and kept moving in the opposite direction. And sometimes it happens like that. Here's another example when a gap happened to the downside right here. It filled, right? It closed, it gapped right here from here to here. It filled it and went back down in the same direction that it gapped down to. So it just depends. You got three examples right here. You got one example when the gap filled, when it gapped up, it filled and continued in moving up in a buy for a buy, right? This one, it gapped down, filled, and continued in the opposite direction continued in the same direction that it gapped down and refilled to. So it went for a buy instead of continuing down. So if you saw a sell, it gapped down, you would expect it to gap up, gap down, fill the gap, continue for the sell right here. And it just didn't do it on this one. Over here, gap down, fill the gap, continued to move down. Eventually it reversed, but by the end, you could have exited out in a good profit. So as a scalper, all of these markups need to be in place before the market opens, correct? Exactly. How far back in time frame would you go for scalping? If you're a scalper, so Kimberly, do you scalp off of the 1 minute, 5 minute, 15-minute charts? Which do you use when you scalp? Yep. So when it gap ups, it's a combination of geopolitics, trying to fill the gaps based on people's emotions. A lot of times it is based off of news. A lot of times gaps based off news, or of course, Trump tweets causing gaps. It could be climate events. Any type of major events can cause gaps, or any type of political events can cause gaps. Employment numbers can cause gaps. Stuff like NFP, non-farm payroll, that kind of stuff. Interest rates can cause gaps. there's a lot of different things that can cause prices to gap. But the way you take advantage of it is if you're already in the and you gap. If you took a trade with a closeout for like imagine you being in a trade on Friday, you were in US 30. It's likely that people have responded late to the news about the trade deal with China. Like some people saw what happened Friday, and they were like, "All right, I'm gonna wait till Monday to enter a trade." So it might cause price to gap up because a bunch of people enter new trades at a higher price, so it caused a gap. And then you could also have people that reacted late to the news and took a sell. They decided that, all right, they didn't like the way that the China response was, or Trump might come out with a tweet and send the market into a whole different direction. He may sign the deals. He may remove tariffs. Those tariffs may cause. So it's a lot of things that can cause a gap. 5-minute chart. Okay. If I'm trading as a scalper, right? Let me delete some of these lines. If I'm trading as a scalper, I'm still going to be looking at my zones. I'm still going to be looking at where the higher time frames are looking at and taking me, right? Maybe I don't go all the way to the weekly. Maybe I don't go all the way to the daily, but I'm at least going to the 4-hour because I still want to see where there's a major zone, where there's a major support. Because especially with US 30, you can scout US 30. Like sometimes I do scout to US 30. I trade off of the 1 minute sometimes because if I'm down here, like how sometimes like the reason why I go to the lower, really like the 1 minute time frame is because it moves so fast. And if I'm looking at it from a 15-minute perspective, for me, my entry, I may want to like enter down here. If I'm looking at this chart right here, right? I'm looking at this chart and I want to get in and I see that I'm near this zone. How am I going to get in on this candle from a 15-minute chart, right? I can't do that, right? So sometimes I do enter on the 1 minute chart. But if I do take that 1 minute on something like this, I'm looking at volume at the time when I enter. That's why I keep this. This is the only indicator I use. Volume measures the amount of traders that are in the market. That doesn't say that there's a number of buyers. It doesn't measure like whether I got a lot of buyers or sellers. It just says that I have a lot of people making trades at this particular moment. So when I see volume kick in, that's when I kind of enter my trades, right? So a volume can usually when you have a lot of wick rejections or you got a bullish engulfing or a bearish engulfing candle, it is because there is a lot of volume in the market. So at the time like this, if I want to take a trade here, or if I want to get in a trade here, you notice like at this time, for my particular broker, there were 7,546 trades entered at this candle right here. Over here, where this big wick was, there was, I'm looking over here on the right at my numbers right here, right? This is the around 6 a.m. and there was 4,408 trades entered at this particular week, which was where I would likely want to enter this trade, right? Or something like what happened on Friday, right? The market was moving crazy right here, right? On these two candles, look how big this fucking wick is right here, right? This wick is probably alone, this wick is, the wick alone is 138 pips, right? But look what follows the wick, this huge volume. At the time when this candle was going, there was 15,240 orders placed between this week and then 13,896 orders on these two candles alone, So that's why if I'm trading as a scalper, I'm looking for like when I see volume kick in. So if I'm jumping in on a 5 minute, right? I'm jumping in on a 5 minute. And is there a breakout? And red folders, bearish, yep. Red folders, what's the best time frame to scalp? I use 1 minute, I use 5 minute. If I'm scalping, but mostly I do breakout retest. I do breakout retest, and then I enter my breakouts in my retest, sometimes using the 15, 1 hour, and sometimes I use the 5 and the 1 minute to enter in my trade. And if there is a breakout and you take the trade, do you recommend moving your stop loss to break even almost immediately if it's time? If I'm scalping and I'm scalping a breakout, like take this spot for example, right? If I'm taking a breakout, right? From this point, I'm gonna enter in a trade right here. So like if I'm saying that this is my breakout, I'll probably enter on this candle right here, right? So if I'm on the 1 minute or I'm on the 5 minute and I'm here and I'm looking to trade a breakout down to the downside, right? I'm looking at that candle to close below this, right? This one was the one that closed, but I probably wouldn't have took this one. I would have took this next one, right? And entered. Once I saw it push up, if it was live, I could show you something. Like I watch the candles, right? So usually when a candle closes, a negative candle closes, you'll see that you'll get an initial, the candle will push up. And watch this on all. Start looking for this. Like when you see a negative candle, a bullish candle, a bearish candle, right? Notice the candles when you see a negative candle, a bearish candle, you'll notice that you'll see the candle open up, you'll see the candle push up, then you'll see the candle push down before it goes all the way down. You might get an extension, then you'll get the close. And each one of the candles, if you were watching this candle live, you would see the candle would reject right here. This particular candle, if it goes from here to here, you'll see the candle open up here. You may see it push down a little bit, push up, and then reject down. I've like looked at this like 50. I look at this and watch this all day. And it works in the opposite way when you see a candle that's going to a bullish candle. You'll usually see a candle, and this doesn't matter what time frame this is. You'll see when a bearish candle opens up, you'll see the candle open, push up, then go down. When you see a bullish candle open up, you'll see it open up, push down, then go up. And when I'm looking to enter my trades, I wait until I get the candle to push up, enter in once I see it push back down to near the open, then I enter my trade here. And sometimes if you like sometimes I will put my candle, my stop loss at break even if I'm scalping. That just depends, you know. Sometimes I'm watching it live myself. Of course, I'm watching it live myself. So sometimes I'll just manage it myself because I don't want to get in a situation where like, all right, I put it at break even, but I know I'm gonna get a retest at some point on the smaller time frame. You may not see it on the higher time frame. So I might, not put it at break even because I might still want to hold on in this trade right here. So if I'm entering here, I could have got out right here with 46 pips. Or I could have held on from here and got in for the breakout closeout, or here and use this as a retest off of this area and then just stayed in right here and I would have just got an extra 50, or do I get a break? Because you don't want to have a situation where you hold in and then you get a break even and then it reverses. So if I'm watching it, I will just close it out myself. If I'm just trying to get a quick 30, I'll just set a stop loss. I'll set a stop of 30 and then go from there. All right. So is that what they call 200 moving average? And Trump tweets and moves very. Christina, the moving averages don't have anything to do with it. The moving averages are just so moving averages are based off of sometimes open or close of the candles, right? So they'll take the close of this candle, close of this candle, close of this candle, and average those up over 200 days. So for 200 days, imagine this being 200 days. They'll take the open, they'll take the close of each one of these candles and get the average. That's all that line is. It has nothing to do with Trump's tweets or volatility. Volatility is the number of traders in the market at a given time, right? So for this particular candle right here, the volatility for this candle shows that there, for my particular broker, there were 970 trades entered at that time. That's what measures volatility, the number of traders in the market at a given time. Boris 1, a potential political partnership trade with U.S. Trump just closed phase 1 with China. Should we expect bullish? So it's likely that we do. It's likely that we do because Boris 1. We got a decent move with the China deal. So it is likely that we have a move up, but we don't know. We set ourselves up for the best opportunities. If it's moving up, it's moving up. We trade up. If it's moving down, we trade down. I don't like to predict and say, all right, it's gonna go up, because I don't know. Friday, I was under the assumption that the market was gonna break new highs. It did, but it failed those highs too. I thought we were gonna break to like 28 something on. I thought we were gonna break out to like 29, or not 29, but 20, 28, 55, I thought we were going to break out to 28,500 or something like that, but it failed, even though we got that huge candle up, So like when we got this candle right here, this big wick, I thought we were like moving up because I was actually in a trade right here. I was in a trade on this candle right here. And I thought we were going to break above this last high right here and just move up. But people didn't like the response that they got from China's prime minister or whoever it was that was speaking, because I was watching it and I think, he wasn't really willing to give a lot of information about the deal. But I mean, he sounded positive, but because he couldn't, there was a point in the speech when he was asked to give like numbers. How much do you think you'll cut, or how much do you think Trump will relieve you? And he didn't want to give numbers. And as soon as that, I felt like the sentiment changed, because at first everybody was like, all right, I'm buying, I'm good. This was a bullish candle. And then you could kind of sense a swing in the content of the meeting, where he wasn't really giving good answers to the question that the reporters were asking him, and then the market just turned bearish immediately. And this is after moving 100 and something points to turn negative, and it was still a decent response because we still got buying, we still kept close to the highs, but you can't predict that. So so that might explain why I hear some scalper mentors advises to check the volume first. That's exactly why you hear people say you check the volume, because you got to know when people are in the market. And a lot of things that I look for when I trade, right? I only trade at times when there is volatility. I don't want to trade at I'm not going to trade Sunday. There's not people in the market. There's not going to be volume. But it's key times when there's volume in a pair like US 30. 3 a.m. That's when the market opened for London. 8 a.m. That's when you got your futures news. Like Kim, again, shout out to Kim for putting us onto this. But you got your future release at around 8 a.m. And that tells you like the futures index, where it is versus it tells you the futures index where the price is for that. They got that release at 8:30 time frame. Then you have 9:30 stock market open. Stock market open on at 9:30. That's when, so US 30, it is a collection of the top 30 companies. So at 9:30 a.m., you got all the companies that are included within US 30 opening up in the market. You got Apple, you got Boeing, you got Walmart, you got 3M. You got all those companies reporting whatever numbers they have or whatever news simultaneously at 9:30 a.m. And you have people that are trading Forex at that time. You have people that are trading stocks, options. You got people that are trading futures, all at that one time of day. So you're going to have the most volatility at that particular time of day. Then you got from 9:30 to around noon, you got the most volatility, because not only do you have us here in the US that are trading at that 9:30 open, but you still got the people in London that are still trading in US, because that's that London US crossover when both of the most liquid markets are open at that time frame between 9:30 and 12. Then you got a lull, usually you have a lull where the market is down between 12 and around 1. What happens at that time? London closed, and us Americans, we on the East Coast at least, we go to lunch. So is a little lull in the market during that time. And a lot of times scalpers, intraday traders, swing traders even, they take that lull and they use that to enter in new trades, right? Because at 2 o'clock, 1 o'clock, the market gets fluid again, because now you got the close, right? You got a lot of people that take swing trades to come in, and they are looking at entering in new trades at that point. So from around 2 to 4:15, the market is fluid again, because you got new traders that you got traders that are exiting their trades from entering in the morning that are taking place. Then you have new traders that are coming in the market that want to take a swing or something like that. So trade London, US more than Tokyo. See, of course, London and US sessions are the most volatile sessions in the market. A lot of people use Tokyo and Sydney session to enter into trades for the US session. A lot of swing traders, a lot of people that are long-term traders use those time frames, because the market is usually consolidated, because the market's consolidating during that time, because it's waiting to see what's going to happen on London session. It's waiting to see what's going to happen at the US session before it will respond. Even pairs like UJ, that's a pair that you would think would be more volatile during Tokyo session. But imagine the number of traders that are in Tokyo versus the number of traders that are in US. So way more people trading in the US market versus the Tokyo market. Do you trade indices? Seems the GR30 is, yep, I trade. I really only trade US 30. Like I don't even trade like regular Forex pairs no more, unless it's news, unless it's a news trade. Like I traded some GBP pairs because it was news, because of the elections on Thursday and Friday. So I traded that, or I'll trade NFP. That's a huge move, huge news day. When they release interest rates, I trade when I hear news like interest rate, because I know that the market is going to be really volatile at that time. And I don't like to be in trades long. Like, I like to be in my trade. If I can get in my trade, in and out of my trade in 15 minutes, and that be the only trade that I take, I'm good with that. Like, I don't want to be in no trade like all day long, like, because I'll get nerve wrecked, you know. I don't want to be like staring at my computer back and forth all day long, like waiting for my trade to close out. Once I hit my 80, my daily goal is 83 to 100 pips a day. Once I'm done, once that's done, and that's why I scalp sometimes, because sometimes I'll scalp, get 50, get 30, get 20, get 10, you know, or whatever the case is. And am I at between 80 or 90, 83 to 100 pips by the end of that 15 minutes? Yep. All right, I'm done. I get out, I'm good. I wait for the next day. I close out my charts and I go ahead and on about my next day. So December is the most volatile month. Ken mentioned that. Is comment on December. I'm curious why. Is it because people trying to save money for Christmas, or people know it's December and it's time to trade? Nope, neither one of those reasons. But it is the most volatile month, though. Companies put out fourth quarter numbers. So stop, especially if you trade indices. If you trade indices, it's really volatile for that, for December month, because companies release their holiday numbers at the end of the year. So they also release fourth quarter numbers at the end of the year. They release a lot major. There's usually some major market news to be released. A lot of companies, a lot of countries release major market news at the end of the year. So you got your retail numbers that show, like a good example was last year when Apple released their numbers last year. Apple released lower numbers than expected last year, and it caused a huge, let me go to that so I can show you like how crazy that was, right? On a daily time frame, let me go to the weekly. Show you last December, right? December, right? This move right here, right? And I remember because I traded this, right? This move was, nope, not it. Went too far back. Wait. Weekly. Okay, I see it. Let's move right here. So let me go to the daily. This was it right here. So on this day, Apple released news that his numbers were low, right? His numbers were going to be lower than expected. The market reacted and shot the market all the way down, right? And December was already going down, right? It was already, a lot of companies reported numbers lower than they were. Then we got a Trump tweet on this day right here and sent the market back up in the opposite direction. And the market been moving up ever since then, you know? Ever since those 2 days right there took place, the market shot down because of Apple. The market shot back up because of, once Apple explained, so the numbers that Apple released was based off of their sales for the fourth quarter for the year, right? But they later came back on, their CEO came back on the next day, did an interview to explain their numbers. And basically what his explanation was about the numbers, he said their numbers were low because they were not focused on product numbers. And that's where those numbers were coming from. Those numbers were coming from the fact that they hadn't sold that many new iPhones or new laptops or new iPads or whatnot. He said that they were shifting the way that they do business by focusing more on a subscription base and having more subscription or subscribing users. And then he hinted towards having the Apple credit card, which is out now, right? So once he did that, then Trump tweeted, that sent the market back in the opposite direction. And I think I banked hard. I don't even remember how much money I made on that day. I made a lot of money on that day because of I paid attention to the volatility at that time and the news at that time. So, yep, expectations diminish results. Exactly. So because of that, you know, because of this stuff like that, especially when you trade in US 30, you have to pay attention to stuff like that on your charts, because you gotta keep in mind that anything related to those top 30 companies that are inside of the US 30 can cause the market to react. So like, especially the high-end companies, like Apple is one of the high-end companies that's in the US 30. Boeing is another one that's inside of US 30. So if you hear news on Apple, pay attention. If you hear news on Boeing, pay attention. Walmart, pay attention. 3M, pay attention, because those are like the high-end US 30 companies. Let me pull that up. Let me pull that up, because I forget sometimes. What are the companies make up the Dow Jones? This right here. Thirty Dow Jones companies, right? Come on. Got too much stuff open. 30 companies, right? 30 companies that make up the Dow Jones, right? And drop that too. Like 3M, American Express. Like anytime I listen to it, I have it on in the background all the time. You know, I have my like Bloomberg on in the background, or NBC, CNBC on in the background usually on trade. But like, keep these companies always on the radar when you're trading. Like, always know what's going on with these 30 companies right here, because these are the companies that make up. If you trade in US 30, these are the companies that make this up. And then if you trade gold too, you know, because gold is works in negative correlation to US 30. So if you hear a lot of stuff about these companies, pay attention to gold, pay attention to US 30, you know, and then pay attention to the pairs that correlate to those pairs too, because you can take trades based off of that too. What broker do you recommend, and are they regulated, and what are the spreads? I recommend two brokers, three really, but not so much on the third one. So the three brokers I recommend are my Hugo's Way, Hugo's Way for US 30 and Bitcoin. FX Choice is my favorite broker because both of those are easy to add funds to and withdraw funds from. US 30, I mean Hugo's Way and US and FX Choice. But I like those two because I like FX Choice more because FX Choice offers you a 15% bonus every time you deposit some money, right? So if I deposit, let's say $1,000, I'll have $150 credit that I'll have to add on top of that I can trade with. Now you must meet criteria to keep the 150. You must have a trading volume of whatever their requirement is. It may say you may have like $100,000 in volume before you can keep the 150, right? But that's like saying, so like if I take a 0 point, before I say that, let me talk about one more thing before I go into that, right? I like FX Choice because if you have a small account or a large account, you can trade with this broker either way. And you can trade US 30 and not have to take as much risk, right? So the lowest you can trade with US 30 is on a Hugo's way is a 0.01, which means you are $1 every time a pip goes up and down. FX Choice, a 0.01 is 10 cents. 10 cents every time that the US 30 goes up or down, just like it was a regular FX pair. Same thing. It works the same way. That's why I like to trade with FX Choice, because I like to twin trade too. So because I twin trade, I can break down my lots into smaller sizes without having to worry about it. And I can just scalp, or I can take off my sizes in my trade without having to worry about using two 0.02. I can use two 0.05s and get the same as one, and I can take half of that as I move up in my trades off. So that's kind of why I do that instead of using Hugo's way. Plus you get the 15%. Plus it's easy to get in and out. And then the other broker I recommend.
Oh my lord.
Hello? The other broker I recommend is Owanda. Owanda is cool, and it's regulated. But the problem with them is they only offer a 50-to-1 leverage, and meaning you gotta have more money in your account to trade with them to make a lot of money. So like I'll probably eventually move my trading account over to them once I'm at like 50,000 or like maybe like between 50 and 75,000 in my trading account. I'll move it over then because it won't really matter as much. But right now, FX Choice does 200-to-1 for leverage. Hugo's way is 500-to-1, and then the spreads on FX Choice, they're low. They're between 1 and 2 pips. Nothing crazy. But for US 30, they range around 1 and 2 pips. So you can usually get in on a scalp pretty easy. It like pairs that are not really volatile that a lot of people don't trade, like Kim trade USDs are a lot, but it's not a lot of other people that do. So the spreads on those, sometimes I've seen those spreads like 10 to 15. I've seen them like 40 sometimes on the low volatility hours. So, and even on Bitcoin, it's a little low too. So, it just depends on, how you want to trade. If you're a scalper and you trying to trade on some of the low volatility pairs, you might not want to use FX Choice on US 30, no USD ZAR, because the spreads are going to be a little higher. So it just kind of depends. But like once it's time to trade, then the spread should tighten up. So back over here. So like right now, market open, USD JPY pushing up. So currency I use on FX Choice, like I said, because I really only trade USD US 30 gold, and then I trade news. So I trade for the most part every pair, you know, if there's news, but mostly US 30.
How do like
So,
all these cars, they're going down, but there's like no space open.
so I usually will trade. I usually just trade US 30 gold. But like, let me go back and finish this up, right? So let me check USD JPY over here. All right, do we got a gap? All right, so now that the market's open, right? Now the market open, right? And I got my zone up here. And I'm looking at USD JPY, right? And it's got the potential to reject this area right here and push back down. We zoom in. This is my zone over here. My zone's about 20 pips wide. All right, that's no problem. So I know within this 20 pips, it's a possibility for it to reject because we're nearing an area of resistance, right? So being that, I know that below this, I have another zone that it broke out from around here. I got another wick rejection right here. Got another rejection area right here. So if I'm taking this for a sell, I would probably wait for it to push up and see how it responds to this area before I would take a sell. Unless it broke below this 109.20 area. So I would be looking for it to either come up here, then reject from here and push down to around here. Or it may push up, you know, when I say push up to this level, I'm referring to this whole area right here because I can see it coming up, pushing past this little zone, right? This little level right here into this area before it rejected. So anywhere, somewhere around this area for it to reject and then push down. But if you wanted to, you could definitely buy up until that point and then sell it on the way down. Or if it just fails from where it is right now, fell under around 109.20, sell it from here to here, and then this area would be the next TP. So you were looking at it from like 109, 20.05, then 108, 99.5, and then 108.81. And if it keep going down, this is likely the area that it stops at right here, around 2050. If it pushed up and just broke, I wouldn't trade it until it broke this high above 109.70 for a buy, unless I'm just scalping it until it gets around here. If I'm trading this as a scalp, if I'm trading it up until here, where I just showed you that I think it's going to push up from, I would scalp it up to around here or to here because it could reject at any point. Once you see price within this range right here, this 20-point range between this area, once you see price within here, it has the potential at any point to reject and reverse because we're reaching a resistance level, right? So you could trade it from here on to around here, around anywhere in between here. before, and I would just look to, if I got in here, I would just look to take TPs somewhere down here at 109, 48, 50, 109, 48, 5, or 109, 70, 03. That's where I would take TP. And then I would look for a break above this to look at something like this, for the push up above this, retest this where it broke out from, and then push up to go up. And then let me see. This one. Somebody dropped their chart, I think. Christina dropped her chart on, this is on US 30. Yep. Christina dropped her chart on US 30. So you are trading this wick. Yep, my chart is pretty much looking the same on my US 30. That wick high and then that wick low. And I'll show you where I'm looking at the same thing yet too, which my wick high right here. All this is a box. It don't look like it, but it's a box. But my wick high, wick low, same thing on Christine's chart right here. It's the hour. I'm looking at either a break above here for a longer buy, or a break below here for a longer sale, for a sale. But I am scalping. I'm gonna scalp in between. Like if I get a break above this price level here, I might take a scalp entry right here above. I think this is around this 28 to 16 area on Christina's chart. So I got this. I have that marked off as well. I got that marked on here as well. So you were looking at entering basically where it gapped the last time, is where I got this little blue line right here, right around here. So if it break above here, this area, I might look for an entry right here, break for a sell. But if it opens, if it gaps up, then I might just wait and see how it reacts. NFP news. What techniques do you use to trade NFP news? So Kim has videos on trading NFP news. I trade Kim's strategy on NFP, on regular pairs, on like USD, USD CAD. No, not USD CAD. I'll trade on news. I usually like to trade USD JPY. No, it's not. That wasn't it. No, GBP USD. I trade GU. I'll trade GU and US 30 and gold on NFP days, because I trade GU because I like trading G pairs anyway, because they move the most on there. IML. And then Kim has a cool way she trades news. But so to give her like a quick rundown how she does it. And I wish I could show you where, but like she would take a pair, like a candle like this candle right here, a wick on the top, wick on the bottom. And then if it's a pair like USD CAD or USD CHF or something like that, she'd take a buy stop and a sell stop. The buy stop will go above the boxed off area about 10 to 15 points. About 10 to 15 points, and she'll put the buy stop there. So you'll see a buy stop around like right here. Then she'll have a sell stop around 10 to 15 points below that wick. so that when price moves and finally breaks out, she'll just automatically get pulled into the chart, into the trade, and then she'll manually pull herself out the trade once she up 30, 50 points or something like that, or 30, 50 pips on the top or the bottom. That's a kind of a rundown, but I'll look through my notes and see if I can find out what day she posts, the last time she posted a video on trading the news. So that way I can just drop it in chat at some point. And then I think I put the notes in there at some point a while back about trading in the news. So, so like basically around 10, about 20 to 5 minutes before the news drop, look for that candle, box it off 10 to 15 points on regular pairs. GBP pairs usually use like a 15 to 20 point buy stop hot below and above the boxed off area. So that's kind of what she would look for. That's the same way I trade news on regular Forex pairs. When I trade US 30 on news, I always look at the volume. And I always look at volume when I look at news. So like again, back to the volume, like look at this. News was coming out right here, right here. Same time the market open. So like normally the market open and you got a volume spike, but look at the news right here. This is when China, this is at these 3 candles alone. 1, 2, 3. And let me box those candles off. 1, 2, 3, right here. Down here at the bottom. These 3 candles alone were news, right? Kim, I'm new to. Can you finish showing us the setup for the alerts? Yeah, okay, cool. So I'll go to that. So like these 3 candles alone, this is when Boris Johnson's news, the Brexit stuff came out, China stuff came out, Trump tweeted, impeachment stuff all came out around these 3 candles. So if I'm trading news, I just drop down to, and especially on news with a time to it, like if I'll trade interest rate came out at 2 p.m. on last week or something like that. So I know I need to look at the candle around the 2 p.m. time frame, but I'm gonna look for a candle where the volume kicks in, right? So if I'm looking at those same candles on the lower time frame when the news come out, right? Those same candles, right? I'm looking at it from a 15-minute. I won't even go into the lower than that. So those candles when the news came out were right here. All right, long ass week, long rejection, a lot of volume. Enter in on the next candle, and I take the trade up from there. That's how I take my entry, right? So if I'm taking an entry, all right, and and in my head I'm like, all right, it's gonna reject here. It doesn't reject there. It's gonna reject here. All right, I see my candle. My first sign of rejection is on this candle. I got a lot of volume, A. I got a long wick, B. I got another candle that has a long wick rejection, a small body. I can enter here and I take my candle right here. So I wait. If I'm taking a reversal or a break, if I'm taking a break, right? If I'm taking a break, I'm looking for the long candle to close. I'm looking for the candle to reject below, like on this one right here, on this candle. This one, it just went too fast. You would have had a buy stop or a sell stop already in place on this candle right here. You would have already had a buy stop in. But You could have got in when it broke this little area. You could have used this little box in. It's a box. It's another method you can use to trade called a box method. The box method where you box in the recent consolidation, trade this box break right here. You would have got a break and the retest of this area for the sell. But I always look for the volume because I see that those are the times when I need to enter into it. You have a volume alert, not a volume alert, but I just know that certain times the volume is going to be higher than others. So that's when I look for that. Can I finish explaining the alerts? Yeah. Let me go back to it. All right. So now that the market's open, right? Now that the market's open, all right, and I can actually set up the alert. So choose this pair. So once you have the tools, options, push notification, notify trade, transaction, and you got your MetaQuotes ID entered, right? You have that all entered. You have your phone connected, right? We've already tested. When you're actually ready to set up the alert, the way you set up your alert is, of course, you come and right click, go to trading, right? And then go to alert. But the difference is this alert that I just set up will only give you sound, right? This will only give you a sound alert onto this computer. When you want to actually go in and add in the push notification, you'll right click the alert, modify, and then the options that you have, right? The options under your alert editor, action, bid, and the value. Those are things that you'll have to take into consideration, and the source, right? So under the actions tab, you'll drop down and use notification. So when you want to push notification to your phone, you use action equals notification. If you just want sound, you will use the action equals sound, right? And then if you want the notifications, again, say for instance, I want to take this trade when I see the bid price drop below 1.92890, right? I'm gonna copy that, right? My notification needs to be set to, my action needs to be set to notification. My bid is lower than the value, right? And then in this case, if you're using a push notification, you can like use the source, type in a little note, sell the break of, bam. This is on MT4, right? Sell the break of whatever this price is. I only wanted to time out after an hour, right? I can set that up. Now, let me show you what will happen, right? Test it. There's my push notification to my phone right here. And it would normally, you would normally be able to hear it. Oh, hold on, let me check this. Maybe that's why. Oh yeah, that's why. So you would normally be able to hear it, but sorry about that. Sorry guys. But if I turn the volume on this, it'll get the back feed. That's why you can't hear it. I forgot why. But I can test it again. I'll disconnect my phone, right? So you can actually hear the alert, right? So if I get the alert coming to my phone right there, just like that, I get the push notification on my phone and on my watch. And if I want to set up the notification, so once I get the notification, I'll know, hey, it's time to respond, right? Then, if I want to, if I was going to take a buy, in this case, the only difference that you would do is, you would make sure that if you're doing a buy, that you have your mouse over where the bid, where current price is. So if I'm looking for a sell, my mouse should be below where current price is. I'm looking for a buy, it should be above where current price is. Go to alert, and once you set the alert, right click it, modify, then go make sure this is enabled, change the action to notification, make sure that your condition is either, you know, bid above or ask above the certain price. I'm gonna use bid above. I'm gonna set the notification here. And then I'm gonna write my little note, buy, break above this price. Make sure my timeout is at 1 hour. Then I'm gonna test it. Then we'll test it. Hold on. We disconnect it from the computer. Nice and loud. I get my alert. It's to my phone. It's on my Apple Watch right here. Hold on. Got it on my Apple Watch. Where you at? It came through, but I can't pull it up right now. Got it on my Apple Watch. Just like I got it on my phone. And so I have time to react to it, right? So if I'm going to trade it, if I want to trade a break above here, trade a break below there, I got my notification set up. So usually I'll set up two. I'll set one for a sound notification, one for a push notification to my phone. So that way I can get both. What website is that? What website is what? Christina, I don't know which website you're talking about. Close above. Okay, another question was explain close above and close below. Okay, so close above, right? So if I'm looking to trade the break of this consolidation area, right? This first candle, this is where I'm looking to trade the break above, right? This area right here. The candle close above, right? Then I have another candle. So this would be the candle to let me know. Say for instance, I had an alert. This would be the candle that will alert me right here. This is the actual candle that I will enter in on the trade. And then I would trade it up to whatever this price is right here. So if I'm trading the candle that break and close above, I will look for this candle. The next candle will be when I enter in on the trade. If I'm trading a sell, right, and I'm trading a sell, I will look for a candle like this. This is not a good example, but it is still consolidating. Let me see. So let's trade this area right here. So if I'm trading a break of this area right here, right? If I'm looking for a close below, this would be my first candle to break that area, right? Then this candle is the candle that I would enter on. So my notification would be triggered on this candle to say, all right, this candle just broke the area of consolidation. My next candle is where I would take my entry. And this would be my retest right here. If I'm going to still take this for a sell down, this would be my break right here, down to here. This would be my retest over here. Even though it pushed a lot above that into it, that's okay, because I could either enter back at the retest area and just be in drawdown for a little while, or I can just wait and see if price is going to come back to where it originally broke from right here. Then again, if I reset my alert, this would be a candle. Let me drag this over some more. If I reset my alert to come back for the retest, here's the candle that, all right, it broke back below my initial break area. Then this next candle right here is where I take my entry for the sell, and now I'm going back down right here. So you're looking for a candle to break the area, close below, and then you entering in on the next candle. How do I get that software like you have the one you're looking at? This one is just MT4. This software is just MT4. The other software I was using, this is TradingView. You can set up a free account on this. And then your MT4, you can just download that from your broker site in most cases. Why do some say it's too risky to use pending orders with Kim set up due to false breakouts? Wouldn't stop loss keep you protected? I miss a lot of trades due to being at work. So, you know, it's just the way Kim trade. She just trade breakouts. And if you trade in breakouts, when you trade in breakout, you don't actually know if the price is going to actually break out because price is rejected from that certain area likely before, you know, likely under a few times, you know. So like this price that this area consolidation that I have boxed off right now, you can see that there was a false breakout right here on this candle. So if I got a buy stop right here that's already set to break out and take this trade, I would have got pulled in if I set it up right here, right where the box is right now to trade a breakout, and I get pulled in the trade right here. If I'm not watching this or I already don't have TP set up in place, then I get pulled back into the negative. But what Kim says is, so like, I don't know if y'all can see it, but this is a wick right here. The wick stops here. The wick stops here. So you would have had a breakout from here to here, right? That's kind of why Kim says when you're taking a breakout trade, there's two ways you have to take a breakout and a retest, right? The TPs she gives us are for the retest. You can use them for the breakout if it just flies, right? Like how she says, shoo, like if it just goes, then you can use those same TPs. But in most cases, the TPs that you want to use for a breakout are about 20 to 30, about 30 to 50 pips. I say 20 to 50 pips, right? Because even this wick right here only went 70 points. But if I'm actually trading this from an hour, right? This breakout right here, if I got pulled in right there at the initial move, here is 30 pips. I can lock 30 pips in. I can lock 50 pips in for sure. Let's look at another breakout from this area on the downside. This move 80 pips. I can guarantee I can lock in 30 pips right here, 50 pips right here. So your initial trade, if you trade a breakout, if you use a stop, buy stop or a sell stop, you can use it, you know. But your TP shouldn't be the same as what you're looking for in a long trade, right? The TP should be like 20 to 30 pips. So that way, when you take the breakout, all right, I got those first 30 to 50 pips, right? I got those first ones locked in the bag. Do I want to sit around and wait for the retest? If I do, I do. If I don't, I don't. You know, if I wait for the retest, that's when you use those big TPs. That's when you use the 100-point TPs, the 50-point TPs, the 150-point TPs. That's when you use those. So like I'm breaking out from here. I wait for the retest over here, right? It retests, it overshot the area a little bit, but if I'm waiting around and I want to take the whole move, right? So even in this case, right? So like this would have been my break, 50 pips. I locked in that profit. I could have took the retest off of this candle right here. The retest, here go the next trade. This one was 90 pips, right? You can even count this as a retest of that same area because we got wick rejection. It didn't come all the way back up to this price, but we got wick rejection, implying that is about to move back down. So if I took a trade from here, I got my volume. got my volume over here. I got my wicks over here. And I enter in on this candle or this candle or even this candle. And I can take that move down, right? And when I take the move down this time, my TPs, where I'm looking for my TPs, right? If I'm looking for my TPs and I'm trading this break, my first TP, let me look over here, would have been, if I'm taking this sell, right? Let me make this 4 hour. My first TP from this break, where my first rejection, my wick rejection, right here, right? First wick rejection below this consolidation area. That's TP1. The next wick, I see high or low. My next wick, here's TP2. My next wick rejection. Here is, I can use this one. Here's TP3. I can use that one. That's tight. The third one, right here. That's my third one, right here. So I got 4 TPs possibly. And I can even see another one right here. So if I'm looking at this, right, and I'm taking a break, my first TP, look at where it is, right? If I took a break right here, my first TP is hit right here already. If I take a retest off of this, if I take the break of this candle, that's where I'm looking at first. Get in and get out on the break. Then the next TP, if I take on the retest, that's when I'm looking for this one down all the way down here, or this TP down here, TP3, right? That's when I'm looking for that. And I can enter in on a retest right here, or I could, if I missed the initial move, I could take this one right here on the retest. Right here on the retest, I got both of these TPs. That's 90 pips right there. I even missed it by a hair, but if I'm using a trailing stop or if I'm watching it, I could have just exited out myself, you know. Then it decides that it wants to hold at TP1, right? Here is another trade I could have took. It came up, we saw it hit TP2. So now we know it's in a downtrend. I got a rejection from this top side. I enter in on this break to break this area on this candle. Now I got all my TPs right here off of that. That's how you would look at that breaking the retest. You gotta look for for me, I look for volume. Kim doesn't consider volume, but that's just my personal preference because I want to know when I should get in the trade. When is the best candle to get on the trade? Kim kind of looks for the break. She sets, her market entry here. She would have had a market entry or her sell stop right here to take the break. She would have likely closed out of the trade 30 to 50 pips on the break, and then she would have took another trade for the retest, and that's when she would have got those larger TPs where it extends all the way down to 3 to TP1, 2, and 3, and then she got the and then she moves the stop to TP1 or 2 and just let it ride, to see where it goes. Do you trade during consolidation or do you wait? If I scalp, I trade during consolidation if I'm scalping. And if I'm scalping, I'm only looking for, if I'm scalping and I'm trading in consolidation, I'm only trading to the top of this, or I will box in the consolidation. Like, I'll trade it if it's ranging like this. I'll trade something like this, but like, I won't trade it if it's looking like this, because that's moving in a particular direction. But like, if I'm, let me get on the 1 hour, right? Sometimes when I trade, like if I come in the market and then I see like a big candle like this, I will look for something like, no, that's not a good example. Like this area right here. If I come in the market and I see something like this, right? And I will trade the top and the bottom. But my goal is, if I'm trading something like this, my goal is to actually get in on the break, right? So if I'm looking at this, I'm going to trade when I see it at the top for a sell, right? Or I'm going to trade when I see it at the bottom for a buy. But my goal is actually to get in for the breakout in either direction of this area. So if I get in the sell up here, I'm actually looking at it to actually get in the break. So where some people get in for a sell right here, I'm getting in the sell up here if I'm seeing something like this. Or if I'm seeing a buy, or if I'm looking at this to buy, I'm trying to buy right here. Hold on. I'm trying to buy right there. Some kind of thing is flying around in here. So I'm looking at a buy to buy down here somewhere, like over here, to go up in the break. So I'll be in the break for the buy or the sell before some people that wait till it gets near the low to take the break. But that's only sometimes. But and in that case, I'm looking at it from the 5 minute, 1 minute chart, and that's why I'm trading, because that way I'll know where to set my stops on those pairs. So I'm not looking for the big buy on that. Not looking for the big buy on that because I don't want to get myself caught in to any of the trades, right? So, any more questions? Can you explain, show example on the 1 minute, 5 minute chart? All right. So I will go over a trade that I took on US 30 on the Thursday. So on Thursday, I took this trade from the 5 minute, from the 1 minute chart, but I'm going to show you from the 5 minute. So I think the call that Kim gave out was to take a break of this area, right? But I missed it, right? I wasn't in front of my chart at the time, right? So let me go back. So because I missed it, I knew to wait on the reset, right? To trade the break of this area, which was an amazing buy if you were in it. I'm like, if I was in this, I would actually be looking at getting into it right here, because this is right when the market opened up, right? This is on a 1 minute. This is right when the market opened up. Here is my volume. Here is my. I look for what's called a 40% rejection, or a 40 candle. I call it a 40 candle. That's when 40% of the body of the 40% of the candle is a wick. And that's showing signs of rejection. So like, let me see, I can't zoom in on this more. Like, but I look for like a candle like this, like right here. This candle is 40% wick. So that candle for me tells me that this could be a possible move up. And if I get another candle that pushed down, that's the candle that I'll enter on. And if it doesn't, I'll automatically trail mine. So if it comes back and just wick me out, that's cool. I don't worry about it. But the actual trade that I entered on, I actually entered on this candle right here for this move right here, the reversal. And I saw that this candle had pushed down back to the entry area. This off of the 1 minute, right? I saw this. This actual candle was the candle that told me that it was going to reverse, right? I didn't actually get in on this candle because I was looking and waiting to see how the price would respond to this wick. So like when you see a long wick like this, it's two things that could happen. It fills that wick like it did right here, and then keeps going, or it fills that wick and then reverses. And so on a higher time frame, you'll see a long wick, then you'll see another wick around this price area, and I'll show you all that too. So like I wanted to see how price was going to react. So basically, again, this is the example that I gave earlier. You had price going 100 miles an hour right here, and then price is coming down. Price just starts going 100 miles an hour right here, all the way down, 100 miles an hour. Then at this point, it decides that it's going to put the brakes on. It hit the brakes, and then it's finally slow. It starts to slow down, but it doesn't stop till it gets right here, right? So that's why I know a lot of buyers entered in right there, because you got a long wick, you got a lot of volume. And the only way you can make a long candle like that is if you have a lot of volume. You don't get, I mean, you can have smaller candles that show this, but to get a candle that's 40% wick and 60%, or sometimes this particular candle is greater than that. This candle's total body length is 44, right? The wick is 33. That's about 90% of the candle is a wick, right? 80% of the candle is a wick. So when you see something like that, that should signal to you like reversal time, right? Reversal, opposite direction. The actual trade I took was here. I saw that. I got this new candle that was large. I took the trade from here off of the, took it off of the 1 minute. I saw that we had this break, this slowdown right here. And then once I saw that it pushed up, I got in right around the open, and I held it from here to, I didn't take all of this because I got wicked out right around here. But off of 1 minute, this trade took 12 minutes, and I was out of this trade in 12 minutes. Like, no, not 12 minutes. I'm sorry. About an hour, right? About 2 hours though. Because I tried to stay in right here, and I just trailed it up. And I think it whipped me out right here. But I got in the trade on a 1 minute. Another place you could have got into this trade was right here. So once we saw this body, this is about a 40% candle right here. That's my first sign. If I'm not trade down here, this is where I could have got in it again. 40% body candle, right? It filled the candle. It tried to fill the candle. It did not. But here it is. I got another 40% candle. This was actually a 90% candle. That's even more confirmation. It tried to push price down. Buyers came in the market. I got a volume, and it pushed the market in the opposite direction. Signal 1, ding, 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 bell, bell, bell. That means that it's other people that are about to help me to push this market up. It's more traders, it's more financial institutions at this same spot to help me push this market up. So now I see that. I got another 40% candle. Bam, that's where I take my entry. I look at taking my entry from the base of this candle, where, because again, remember when I tell you, when you notice candles that are going up, you'll get a push down, then it go up. It's not, I want to say about 70% of the time, when you see a huge move up or a huge move down, you will never see a candle without a wick on the top or the bottom of the candle. It's not a lot of times you'll see a flat candle, right? You won't see a flat candle like on a body of a candle on a huge move down. Like, because I'm using a 1 minute for things, you may see it more often than using it on a 15-minute or a 1 hour time frame. But in most cases, you're going to see a wick before a huge move now, right? So on the opposite direction. So like you'll see a wick now here, then on the actual candle that move, it pushed down, wick right here. I would take my entry right here at the base, and then I'm riding it up. And in 1 minute, like that's why sometimes that's why I take this, because I know this was news. This was news right here. I knew that there was going to be a move, right? And then and when news happens, a lot of times you see price move up before. If it's going down, you'll see a lot of times when news happens, you'll see price move up first, then go down. If you're seeing a news that drives price up, you'll see it move down, then you'll see it go up. That's because when the news is released, if you are already in, like if I'm expecting news to drive price up, and the people that are already in the trade from previous that are trying to sell it, okay, let me give a better example. So say for instance, I'm in this trade right here. I'm like, all right, price about to go down. Price is going down. So I'm selling. Uh-oh, buyers came in. When you sell a trade, when you're in a sale, the way you get out of a trade is you actually buy it back. You buy your trade back. So if you're selling the trade from up here. You need somebody to buy it from you. You know, you need somebody to buy it from. So you're buying it from somebody else. So I mean, sorry, you're selling it from somebody else who you had to buy it from, right? So you're selling it from there. It had to be a buyer on the opposite end in order for you to sell that, right? So when you are selling it, price is going down, 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 down. And in order for you to get out of the trade, to exit that sale, you have to give it to somebody to buy, right? So that's what causes that, right? That's what causes those long wicks. And it works in the opposite. If I'm buying this down here, I need somebody to buy it from, who is the seller. So that's why you get those wicks that are in the opposite direction, even though, you know, it's going up for a buy. So you'll have to wait for somebody to come into the market and then buy it from them that was actually in a sale already. So you'll get those wicks that are in the opposite direction, right? And so I waited for this candle 1 minute. In a circumstance like this, interest rate, in 1 minute, like what is this? This is I got my signal here. This is 152. What is this? Yeah, 115. No, the interest rate drops at 230. So interest rates, we got a signal right here that the interest rates would go up for a buy because we got all these buyers came in. Then we had the actual move right here. So in 2 minutes, this moved. In 3 minutes, this moved 118.3 pips. So that's why sometimes I use the 5 minute, 1 minute, right when the news release, and I'm looking for stuff like this. So that way I don't have to be in the market all day. I don't have to be in there all the time. But to protect yourself, what you can do to protect yourself is you immediately put your stop in profit. So that way, if it reverses and it just goes the opposite direction, you'll get wicked out, but you didn't lose any money because you're already in profit. Or you can take a small gain, which is okay. And then you can look for the next entry. So if you miss this move up, all right, where did it break out from? It broke out from here, right? You look for it to push back down here. If it doesn't push back, like in this case, it didn't push back all the way down. But did I get a 40% candle somewhere? I got one right here. I could have took that buy up. This is a circumstance where another time, this was where I got I got my first 40% candle. Did it move all the way back up? No, but if I had took the next candle, I would have saw this, either took the entry on this candle, I move my stop automatically in profit. Then I either take this little 25 pips and be happy with that, or I get stopped out around 3 pips. Who cares? I'm good. I see it again. All right, is that was the move up? Is this the move up right here? All right, I see my candle. I enter in right here. It doesn't move up all the way at a time. It comes back. I'm stopped out again. All right, that wasn't it. Was this one it? Yes, no. We don't know. Move up, stop me out. I'm good though. I ain't lose money. I move up, stop me out. It moves up, comes back down. Does it stop me out? No. I'm good. My TPs are up here again. Now, does it hit my TP? It came all the way back down like it was, but I'm already in the trade. And I'm in for 60 pips right there. I'm good. That's how you manage that situation. If you want to scout in, or if you want to scout into the move or not. Why are the gaps on some brokers and some are not? They get their data from different sources. So Hugo's Way has his own way of getting data. FX Choice got his own way of getting data. Trading got his own way of getting data. So the data for each of the brokers may come in at different times. It may come in a little off in the numbers, but that's why you get the fluctuation in the gaps and the data. That TradingView, I don't know why it doesn't show the gap sometimes. Not sure. I think it's just data related. Can you see the gap on GJ? On GJ. On my broker. Gap. Yeah. I see this gap. I see this gap right here, but that was last Friday. Today, is there a gap? No, I don't see a gap on GJ for today. But yeah, I don't see it. Let me see what trading we have. Nope, no gap on either one of them. Let me check on a lower, maybe on a lower time frame, it might be one. Nope, not even on the 5 minute. Nope. Yeah, no, I don't see it. Well, these on the 1 minute, but I don't really pay attention to the gaps on the 1 minute or 5 minute or 15, like 1 and 5 minute. I don't really pay attention to those gaps. And if it's on the 5 minute, it'll probably show on that. You can see the gap on a 4 hour. If we're talking about this one, yeah, this one. So this one, like I said earlier, sometimes gaps fill, sometimes they don't. Yeah, sometimes gaps fill, sometimes they don't. But in this case, like I said, it's a likelihood that this one may take a while before it fills because we got that recent news that drove this gap, drove the price to go up, right? So like in this case, this gap is due to elections. This gap is due to the response to Boris Johnson being elected as remain as prime minister, right? So, and then you know, this also had to do with his comments on the Brexit stuff. So that's why you got this gap. So this gap might be one that it might take a while to fill before it's filled, and then it also might be, you know, if it does fill, if it does come back down to it, I would actually look to buy again, you know, because, you know, with something like this, this is where the direction of the market wants to go. It's telling you that. If it comes back down, I would probably look to buy where the gap started. So if I'm looking at a 1 hour, I would probably look to buy somewhere back around here if it actually fills. And so, and I wouldn't look for it to fill until I saw price break below here. So I would need price to break down below here, or because of how I trade, I might even look for a trade on the break of this week. That's captured, like as you can see, this particular wick is captured a lot of the price action in it, right? So this wick is capturing a lot of price. So it's kind of safe to say that if it breaks this in either direction, it's gonna go, you know, because we got a wick rejection. I like that, you know, in both of those areas, right? But if it comes back down and fill this gap, I'm looking to take a buy off of this level, you know, 144.06 level. That's what I would be looking for. And my first TP would be where the gap right here around 145, right here, huge TP for an hour standpoint, but that's a good TP though, because that's where the gap opened, you know. And then I would look to just keep following it up, you know, because the likelihood of this, you know, continuing to move up is high right now because we got those events, those news events, those, you know, and then there's probably deal. I think I heard there was information about U.S. and UK doing tariff deals. I can't remember the details, but will you be doing recurring sessions like this? If y'all get on, I'm on. Like, I love to talk about trading. I was doing this all the time, like, you know, but nobody was getting on the session. Nobody was getting on, so I stopped doing it. But I mean, if y'all want to get on, you know, I'm cool. You know, if you want to get on, I'm gonna post this to my YouTube page, and yeah, I'll post this on my YouTube page. I want to say Sundays I'll get on before Kim, but you know, just let me know. You know. Oh, word! You've been watching my YouTube? That's what's up. That's what's up. I'm gonna when I finish recording it, that's where I'm gonna put it. That's why I'm gonna put it on YouTube. So yeah, Sunday work for me. If it work for y'all. So my YouTube. Oops. My YouTube is YouTube. YouTube is this. Let me grab it. Switch accounts. It's right here. I do have. I don't have I have my own Telegram, but I don't really be in there because nobody like. I tried like to open up my own Telegram, but nobody was talking. Like I'll be the only one talking. You know, like I ain't open it up just so I can just be the guru. Like I'm not a guru. I want to help. I want help too. So I opened it up and nobody was saying anything, and I still got it. You know. But yeah, so I just didn't keep up with it. This is it? Let me see. Yep, that's it. 24 subscribers. Yep, that's the link. That's the link. And let me drop the IG too. IG, same thing. IG is right there. It's the same thing. I think yeah, yep, that's it. That's it, man. So Y'all follow me? Let me just add y'all so I know. Add y'all. You good. That's what a recording is gonna be for this, and then I'll just drop the link in there. You know. So, yep. So, all right, man. I'm about to go eat. I appreciate y'all for joining, and I hope it helped out. I'm based out of Atlanta, ATL. So if y'all down here, say hello. Again, give Kim some thanks because there's the only reason why y'all even know who I am is because Kim. So thank Kim too. Everybody, you know what I'm saying? Like, give Kim some thanks, man. We don't know each other without IML, so thank IML. And enjoy the rest of your Sunday. And yeah, that's it, man. Recording will be up in like an hour. All right, peace out. Later.
All right. Thank you. Thank you. Thank you.
All right, y'all.